Hello, everybody. Welcome to Wednesday. The S&P 500 was up 2.6% today. The Federal Reserve raised rates 0.75%. Chairman Powell came out and said some things the market really liked, which is, for example, that they are seeing some of the weakness that's happening in the economy. They still are very much so focused on inflation, but they finally acknowledged some of the weakness that is coming through, and then talked about the fact that he did not believe that we were currently in a recession, mainly because of how strong the job market was as far as that goes. So really, the market started responding positively to that. If you remember so far this year, when the Federal Reserve Chairman has come out, we've had a lot of 2 and 3% runs up in the stock market during the time that he has spoke. The last time this happened, we gave it all back, on the Thursday after that. So we'll have to see what happens. Back in March, we had a big run up after that. All of those have ultimately failed, and we've come down to new lows that we established in June. Mainly because you have to remember right now that the major motion of the market is to the downside. The 200-day moving average is going down. The stock price is below the 200-day moving average. So the minor moves are these up moves. Eventually, one of those minor moves will change the entire trend, and the major move will get back to the uptrend. Maybe this is it. Who knows? There is some room for the market to move up from where it is now, as far as I can see here, because the next level of resistance is about 4% higher, and there's not a lot of resistance in between. So the market has some free room to run here, as far as I'm concerned. So, we'll see how this plays out. We've had some very bizarre things happen this week with companies that have reported earnings, like Microsoft and Google missed on their earnings. They were both up 6-7% today. Visa reported earnings that were very good, actually, and beat their expectations. It was actually down today, even in this big up day. So sometimes when you see things like that, there are things going on behind the scenes that you need to let play out. Options expirations, short covering, those types of things. We'll see how that goes. We did have Meta report after hours, first time ever in the history of the company. They had a decrease in their revenues, and so the stock was down about 4%. After hours so far. We'll see how that plays out as far as that goes. So still have Apple reporting tomorrow, and we have the gross domestic product coming out tomorrow. We have the PCE inflation number, which is the Fed's favorite inflation number, coming out on Friday. So lots of good things still coming at us here this week to see, where things are and how things are going. But the market is showing some good resilience here. And we'll see if this can continue. Is this the beginning of a reversal so that the major trend is an uptrend, or is this just another one of these small, uptrends that eventually falls down and comes down to the bottom? I think the probability is higher that we go lower, just because the Federal Reserve, very specifically today was kind of didn't answer the questions about whether they would reverse based on a recession. And I think that means to me that they won't. They'll continue to push on inflation. They see inflation as a worse scenario than a recession. And they might be right there, actually. And they talked over and over and over again about getting things back down to 2% inflation, and how that impacts families that really can't afford much in terms of their necessities, and how those necessities are getting more and more expensive and what have you too. So, they are going to be pushing on that interest rate, especially if inflation continues to go up. Talked again about fighting headline inflation, which includes food and energy, which is a tough one to do with the Russia situation, especially with Russia now cutting back. They cut back on the Nord 1 pipeline to bring that gas down to 20% of capacity. And so they continue to do that. We're seeing natural gas prices just skyrocket. They're 10 times higher in Europe than they were this time last year. So those are things that I think are going to be kind of fighting the other direction. And if the job market stays strong and people continue to spend, that's a problem for the Fed too, in terms of inflation. One of the other ironies here that a lot of people don't realize is that an upward moving stock market is actually something the Fed does not want right now, because that encourages more consumer spending. So, one of the things they've done in the past is, after these meetings, if we had a big run up, we've had some of the other Fed governors start doing, interviews where they're being a bit more negative. So we'll see if that plays out over the next week or not. So anyway, things to watch out for. Good to have a good up day. Expect some possibility of some more runs up. Hopefully we break through that resistance, and then maybe we are really changing the trend here. So we'll see how this plays out. But exciting time to be watching. Lots to be learned right now about the stock market and how this works. And I look forward to talking to you tomorrow. Thank you.